Guys, this is absolutely crazy. 78% of Americans are actually quitting the housing market. In this video, we are going to go over this article from 4B's advisor. Higher mortgage rates are already changing American behavior, as people are rethinking their housing goals by pulling back from applying for a home loan or even shopping for homes, according to a recent 4B's advisor survey. Most respondents, 85%, say they expect mortgage rates to continue to increase for the next several months up to 2 years. Already, rates have climbed above 5% in recent weeks, the highest point in more than a decade and far above the 3% the same last year for a 30-year fixed-rate mortgage, according to Freddie Mac. This is understandable because the Fed is already showing signs of monetary policy. And not to mention, they plan to meet up 5 times this year, and they probably will raise the federal funds rate probably even more. So I'm not surprised that people are worried. The increase in rates caused 34% of respondents to pause looking for a home and 32% from applying for a mortgage. Here's how higher rates are affecting Americans when it comes to housing and where they think rates are headed based on recent survey results. I'm about to show you guys a graph from Redfin that is actually pretty important. The graph I'm showing you guys is bidding wars that Redfin agents face. Now I want you guys to look at these 2 months, March and April. It's very important. There's a strong correlation. Now, if we go back and look at the 30-year fixed rate mortgage, March is when interest rates reached 3.85%. And if we go back with the federal funds rate, this is actually the first time that the feds raised the basis points up to about slightly to a quarter of a basis point. April, which is the biggest, one of the biggest, reached 5.11% interest rates. Now, if we go back to the federal funds rate, let's see, April it reached a third of a basis point. I just wanted to show you guys, for some people that don't believe higher mortgage rates are actually having any effect, because as of right now, bidding wars have actually decreased according to the graph, and it's probably going to decrease even more because they didn't release the May report. But now let's get to the main graph and let's break down some more data. Where consumer thinks rates are headed. Among the 85% of respondents who say mortgage rates will rise, 37% of that group say rates will increase in the next 6 months to a year, while another 27% say it will be within the next 3 to 6 months. Conversely, 9% of respondents say interest rates will level off, and another 6% predict mortgage rates will fall. When asked that what interest rate would they stop applying for a mortgage, most respondents, 42%, said they would not consider a mortgage range of 4 to 5%. Another 27% respondents said they would not apply for a mortgage when the rate reaches 6 to 7%. Now, guys, looking at this information that was presented, now I know I am young, but I do a lot of research. 4 to 5% interest rates are actually used to be the average, and still historically it is the average. So now the average person stays in the house for about 15 years. So let's say you got a house in 2007. Your interest rate was 6.70% basically, and it was for this whole year. Majority of this year it was in the 6% range, and this was the average mortgage rates, and this is what people was accustomed to. Now it has went down, and people have become less adjusted to those type of interest rates. What I can correspond with this is that due to increasing inflation and increased cost of living comes along with that, these 4 to 5% interest rates is more higher than what people are kind of accustomed to. It's what Americans have got used to. They were used to 2 to 3% interest rates. Now, nobody's affected more than this than millennials. Millennials make up roughly 42% of the home buying, and they're the biggest demographic generation that is actually buying homes as of right now. They passed up the baby boomers. They done saved years of savings, and then they come into a housing market where everything is expensive. Home appreciation. The average home being sold is $507, $800. Millennials can't afford that. And to top it all off, inflation is hitting the millennials the hardest than any other generation as of right now. A study by Wells Fargo analyzed the customer expenditure survey to determine which cohorts have seen the steepest rise in cost of living. An age-based breakdown showed that millennials experienced the highest inflation, 6.8% for the 25 to 24 age group and 6.9% for the 35 to 44 age group. The latter also include the youngest Gen Xers. Now that's enough of me adding tidbits and information. Let's get back to the article. Rising interest rates have caused most respondents to halt home shopping. Americans say the recent spike in interest rates have caused them from looking to buy a home, which is 34% of people, applying for a mortgage, which is 32% of people, and 12% keeping them from refinancing their mortgages, and 22% of none of the above. Mortgage applications to purchase a home also fell 12% for the week ending May 13th compared to a week earlier. According to the Mortgage Bankers Association, it was the first time in 3 weeks that applications dropped. For those who were considered buying a home, 27% of respondents say they will wait longer to buy a home because of the interest rates, and 26% said they are choosing to rent instead. Housing experts say those choosing to rent because of higher rates might be short-sighted in the long run because mortgage payments are often more stable than the cost of being a tenant. Rental payments have also skyrocketed by 26% and 25.7% for a 2-bedroom in April compared to a year ago, according to rent.com. Guys, the rental appreciation is actually crazy. Now, I just want to do some math here. So if you guys can join with me and see something real quick. Now, the average personal income of an American is $63,000. Now, divide that by 12, and that is roughly $5,300 a month rounded. But oh boy, inflation does exist, so we have to take 8.5% from the monthly income. This gave us $4,505. Now, you actually can make a living with that amount, but it all depends on what you live. But this time we're looking at general statistics. Now, the average 1-bedroom rent is $1,751. And to my knowledge and what I learned, that you have to make times 3 or at least 30%. If you take 1,751 and times it by 3, it's over exceeds your budget. You won't be able to afford that. That's what landlords typically look at too. Interesting enough, it say most borrowers are willing to pay a higher interest rate for a home. When asked whether they accept the higher interest rate given the current housing market and their own personal credit score, some Americans said, yes, the interest rate does not matter to me as long as I am approved for a mortgage. Yes, I will make monthly cutbacks to afford a higher interest rate. No, I would shop around. I will not be purchasing a house anytime soon. I would wait 6 months to increase my credit score, then apply for a mortgage once my score increases. Most respondents, 36%, say while the interest rate is a key factor when deciding a mortgage, it's not the most important cost to them. 21% said they were more concerned about closing costs than the interest rate. The cost of housing overall has jumped substantially in the past, with closing costs nationwide up 13.4% in 2021. Compared to the previous year, according to CoreLogic, a real estate data provider, the average closing cost on a mortgage to purchase a single-family property was $6,905 after transfer taxes in 2021. Well, guys, this is going to be the end of the video. Make sure you like, comment, subscribe. We're on the road to 3,000 subscribers, and thank you guys so much. Even though, I really appreciate that you guys always tune in. I really love that, for real, for real.